Let's get in Prayesh Jain, the oil and gas analyst at IIFL. He joins us right now on the show. Prayesh, good having you, and thanks much for taking the time out. Lots of stocks active in your pocket. I'm sure you were busy last week or so, or probably more so in the last week. But let's just start off with one, which is Cairn India, and that recent nod for the Rajasthan field. I read a couple of reports from your peers in other brokerages as well, who expect that the top line would increase by 48%, buy calls coming in all across. What's your view on all that's happening with Cairn India and the stock thereof?
Good morning, everyone. Anuj, Cairn is also a top pick in the oil and gas space for the year 2013. We feel that the stock is pretty undervalued given the growth prospects it has. Even if we consider that the volumes are, even if we consider the worst case scenario that the volumes would remain flat, the stock still remains undervalued vis-a-vis its competitors. Now, talking about the upside, definitely there are substantial upsides given that the company has in the past mentioned that the production levels can go up to 3 lakh barrels of oil per day as compared to around 1,75,000 barrels of oil per day that the company is producing right now. There is substantial scope of upside. Furthermore, it has got approvals from the government with respect to further exploration in the Rajasthan field, which is the most prolific field it has right now, or the only producing field it has. So going down the road, you might see reserve upgrades happening, but that would happen over a medium term. Not it wouldn't be in a year or two, but it will happen over a medium term. So the Rajasthan block is definitely a big value creator for Cairn India. Thirdly, we also have a very bullish view on crude oil prices given the global scenario of liquidity infusion in most Western economies. Secondly, the demand from the Asia Pacific region is expected to remain strong. So in that terms, we have a bullish view on, and Cairn is a perfect proxy play for rising crude oil prices. And lastly, the company has declared discoveries in Sri Lankan blocks. Possibly in the near term, we might see some declaration of reserves happening from that end. I think so. What we understand that those are pretty prolific blocks. So as the reserve numbers are declared, possibly we might see some more upside to the stock because that particular block is not factored in by any of the analyst community right now. So in that terms, Cairn is definitely a top pick for oil and gas space over 2013.
Right. What about Reliance? Because that's been a ranked underperformer. You think the stance on Reliance could change this year? The overall outlook, given that they've also got the nod for developing areas around their original hydrocarbon finds, you think that's a big positive for Reliance Industries? What could change for the company really to change an outlook?
See, Reliance is one stock which will remain in action throughout of calendar year 2013. There are quite a few things that are happening around the KGD6 block now that the government has given new exploration approvals, and there are expectations of CAG audit committee, CAG audit also going through. Thirdly, the budget approvals are also likely to go by. In that terms, KGD6, there are lots of things happening around the KGD6. But the thing is, the production has been on a declining mode, so that is a key concern. The other two segments which contribute to profitability of Reliance Industries are refining and the petrochemical. Both the places we have seen pressure in terms of margins, which are likely to sustain throughout of 2014. Throughout of 2013. So in that terms, I think so the earnings will not see a major uptick in FY14. The gas price hike, if it goes through, and the quantum is yet to be ascertained, but given that Rangarajan committee has given a recommendation of around more than $8 per MMBTU, if that kind of gas spike comes, definitely FY15 earnings could be pretty strong. But as of now, because of the uncertainties, we have a market performer rating on Reliance Industries.
Okay. Prayesh, what about, just before we talk about the oil and gas, the OMCs, what about Petronet LNG? Because the results are slated to come out later this week. We hear from sources that this time around the numbers could be better. What's your result estimate, one, for Petronet, and is it a good time to enter the stock?
Petronet again is one of our top picks. Results are likely to be pretty strong given that the volumes have been pretty strong and the spot volumes might be better for the company in this quarter. So definitely Petronet would post very strong set of numbers. The reason we have it as on our buy list is the fact that the domestic scenario for LNG is getting pretty favorable, given that the KG-D6 production is on a declining mode. Production of ONGC fields is on a falling trend. Globally, LNG prices are likely to moderate given the increase in supply from US over the medium term. Japanese demand might start slowing down a bit. So in that terms, I think we believe that Petronet is well placed given its capacity expansions over the next 3 years. So in that play, Petronet has built a very strong business model as well, with majority of its volumes on long-term contracts, both on the supply and both on the supply side as well as the consumer side. So in that terms, Petronet is well placed to maintain its earnings momentum, and that's the reason it's there on our top buy list.
Sure. The buzz for a hike in diesel and LPG is getting louder again, and that's impacting the oil marketing companies as always. What's the call? Do you think that these could be getting in a zone of being re-rated if the actual hike announcement came back?
Oil marketing companies is a fact which we always recommended our investors to have more of a trading view rather than an investment view, mainly on the back of uncertainties. Although there are talks of a diesel price hike going through, but it's a difficult proposition for the government to do it right now, given the fact that they are into an election year, and there has already been so much spoken about the LPG cap and the diesel price hike. So it's difficult to go by, but if these price hikes are implemented, all these oil marketing companies will undergo a re-rating, because this is one point where the valuations have been suppressed because of subsidy issues. The other point is subsidy sharing pattern, which is a big question mark over the future, because the government has never been able to give a clear-cut formula for subsidy sharing pattern. Government is keen on reducing its deficit, so possibly the burden might be on the oil marketing companies and the upstream companies. So in that terms, I think the risk to earnings still exists, mainly on account of the subsidy sharing pattern rather than the subsidy itself.
30 seconds before I let you go. If you were to recommend one oil and gas stock from a 3-month perspective, so it becomes a bit of a trading opportunity as well as an investment opportunity, which would it be?
I think I'll go for Petronet LNG and possibly Cairn India as well.
Okay, but Petronet remains the first pick?
Yeah.
Great. Paresh, really good having you. Thank you so much for taking the time out and joining us.